Right now, at this exact moment, money is moving. Not in a way that makes headlines, not in a way that trends on Twitter. Quietly, deliberately, and completely out of sight. A wealth transfer is happening, and the people funding it don't even know they're doing it. I'm going to show you exactly how it works, exactly who's on which side of it, and exactly what you can do, so you're not the one writing the check.
But first, real quick, I want you to think about something. When was the last time you felt like your money was actually going further? Not just keeping up, actually going further. Because right now, groceries are up, rent is up, insurance is up, and your salary? Probably about the same as it was 2 years ago. And yet, somewhere out there, wealth is being created at record speed. The stock market has hit 53 all-time highs. Billionaire net worths keep climbing, and Wall Street keeps celebrating. So here's the question nobody is actually asking. Where is all that wealth coming from? Because it has to come from somewhere. And if you don't know the answer to that question, there's a very good chance it's coming from you.
Here's what the headlines aren't connecting for you. The U.S. government is carrying $40 trillion in debt. They're spending $2 trillion more than they earn every single year. Goldman Sachs just raised their S&P 500 target to 8,000. Morgan Stanley and Deutsche Bank are projecting 17% growth. And Trump just made a move that, whether he meant to or not, pulled the trigger on the largest wealth transfer of our generation. This isn't a theory from a Reddit thread. This isn't a doomsday prediction. This is a pattern that is played out in 1929, in 1989, in 1999, in 2008. Every single time. And the people who recognized it early didn't just survive it. They got rich from it.
Now, I already know what some of you are thinking. Gigi, someone is always calling the next big crash. Someone is always saying this time is different. Why should I believe this one? And honestly, that's the right question to ask. So let me be completely straight with you. I'm not calling a crash. I'm not telling you to sell everything. I'm not here to scare you into clicking something. What I am telling you is that right now, the CAPE ratio, which measures how expensive stocks are versus their actual earnings, has only been above 40 twice in the last 140 years. Once at the peak of the dot-com bubble, and right now. That's not an opinion. That's not a prediction. That's a number. And by the end of this video, you're going to understand exactly what that number means for your money. The 3 moves that historically protect wealth during exactly this kind of environment, and why the people who are quietly getting richer right now are doing something very specific that most people never even think about. Stay with me. This one matters.
Hey everyone, welcome back to Gigi Invests, the channel where we break down exactly how money moves in the real world, so that you can move with it. If you're brand new here, hit subscribe right now, because this is exactly the kind of content we put out every single week. And if you've been here for a while, you already know what we do. Let's get into it. All right, so let's start with the big picture. Because before we talk about what's happening right now, we need to understand why it's happening. And it all starts with one number: $40 trillion. That is the current U.S. national debt. And on top of that, the government is running a $2 trillion annual deficit, meaning every single year they spend $2 trillion more than they actually bring in. Now, obviously, that's not sustainable forever. So the question becomes, how does a government get out from underneath that? Because they have exactly 3 options. Option 1, raise taxes. Painful, unpopular, political suicide. Option 2, cut spending. Also painful, also unpopular. And if you've watched any news lately, you know how well that's going. Option 3, and this is the one they almost always choose: inflate the debt away. Let the dollar quietly lose its purchasing power over time until that $40 trillion becomes worth significantly less in the future. Economists have a specific name for this. They call it financial repression. And here's the part that should get your attention. This is not new. The United States did this exact thing after World War II. They printed money, kept interest rates artificially low, and over the following decades, the national debt just quietly disappeared. Not dramatically, not with headlines, just quietly in the background, while everyone went about their lives. The people who understood what was happening protected themselves. The people who didn't funded it. That's the wealth transfer. And right now, in 2026, it's happening again. Now, I want to show you this pattern in real history, because this is where it stops being abstract and starts being very, very real. Example 1, the NASDAQ bubble, 1999. From 1995 to the year 2000, the NASDAQ rose 400%. The final year alone, up 90%. People genuinely believed that the internet had permanently changed the laws of finance, that this time it really was different. Until the NASDAQ lost 78% of its value over the next 2.5 years and didn't fully recover for more than a decade. Example 2, Japan, 1989. Between 1975 and 1989, Japan's stock market rose 900%. Land became so valuable that the imperial palace grounds were estimated to be worth more than all the real estate in the entire state of California. Then, interest rates went up. The market crashed 60% in under 2 years, and their economy spent the next 34 years just trying to break even. Example 3, Venezuela, 2018. Their stock market posted a 22,000% return. 22,000%, while the actual economy contracted by over 50%. People were getting paid in money that couldn't buy food. Now, here's the pattern I need you to see. In every single one of these cases, wealth didn't disappear. It transferred. From the people who didn't understand what was happening to the people who did. From the people who were caught off guard to the people who were already positioned. From the people who panicked to the people who stayed calm and prepared. Every single time. That's not a coincidence. That's the pattern. Okay, so now I want to talk about the part of this conversation that almost nobody covers. Because right now, all over the internet, people are splitting into 2 camps. Camp 1 is saying, stocks only go up, print the money, nothing can stop this market. Camp 2 is saying, everything is about to collapse, sell everything, hold cash, run. And I need to be very direct with you, both of these are wrong. And both of them, if you follow them blindly, can seriously damage your financial future. Let me show you why. The stocks always go up during inflation argument. Sounds logical, right? If the government prints money and everything gets more expensive, then stocks just go up with everything else. Except history says not exactly. Between 1918 and 1922, Germany's stock market lost 97% of its value before the hyperinflationary peak even hit.
Zimbabwe's market rose 500 times in nominal terms during hyperinflation, then lost 99.8% of its value measured against US dollars. And in the United States, throughout the entire 1970s, with inflation averaging 7% per year, the stock market basically went nowhere after adjusting for inflation. On paper, the numbers looked fine. In reality, purchasing power was being silently destroyed. So, yes, prices can go up while you quietly get poorer. That's the trap. Now, the hold cash and stay safe argument, this one feels even safer, right? Cash is stable. Cash doesn't crash. Just sit tight. Except in a financial repression environment, cash is one of the most dangerous things you can hold. Because inflation doesn't announce itself. It doesn't make headlines when it's slowly eating your savings. It just quietly, every single month, makes every dollar you're holding worth a little bit less. And this, right here, is exactly how the wealth transfer works. Not through some dramatic crash, not through some obvious event. Just quietly. While people are busy arguing about which extreme to believe, money moves from the uninformed to the prepared. So let's bring this all the way forward to right now, 2026, and what's actually going on. Because here's the most honest picture I can give you, based on every historical data point we have. The United States is not heading for a Zimbabwe-style hyperinflation. The United States is not about to default on its debt tomorrow. What is most likely happening is something far less dramatic and far more dangerous because of it. A long, slow, quiet period of financial repression. Here's what that looks like in practice. Inflation runs slightly higher than interest rates. Not dramatically, just slightly. Asset prices rise in dollar terms, but feel flat because your purchasing power is shrinking at the same time. The debt gets managed quietly, over years, over decades. And one day you look up and you realize a basic grocery run costs twice what it used to. A starter home is completely out of reach. And your savings account, despite never losing a single dollar on paper, can buy half of what it could 10 years ago. And right now, today, the CAPE ratio sits above 40, a level only seen twice in 140 years of market history. Once at the absolute peak of the dot-com bubble, and right now. That doesn't mean the market crashes tomorrow. It means the margin for error is gone. It means one unexpected event, one policy shift, one data point that surprises the market could trigger a 20, 30, even 40% decline before most people even realize what happened. And the people who had no plan, no margin of safety, no preparation, will be the ones funding everyone else's recovery. All right, so here's what you actually came for. Not the fear, not the theory, the moves. Based on every historical example of financial repression, every wealth transfer cycle we've ever seen, here are the 3 things that the people who came out ahead actually did. Move 1. Own assets that hold real value. Not just US stocks, not just cash. Real assets. that maintain purchasing power when the dollar loses its. This means globally diversified index funds. This means real estate, if you can access it. This means commodities as a small hedge. When financial repression runs, real assets are your shield.
Move 2. Never put yourself in a position where you're forced to sell. This is the one that almost nobody talks about, and it's the most important one on this list. Look back at every single historical crash, every melt-up that turned into a meltdown. The people who got destroyed weren't always wrong about the market direction. They just ran out of runway. They had no cash cushion. They were on margin. They had no emergency fund. And when life happened, job loss, medical bill, emergency, they were forced to sell at exactly the wrong moment. Keep 3 to 6 months of living expenses in accessible, liquid cash. Not because cash is a great investment, but because cash buys you time. And time, in investing, is everything. Move 3. Stop waiting for the perfect moment to start. I'm going to be direct here, because this one matters. The wealth transfer isn't approaching. It's already in motion.
The people who are quietly positioning themselves right now are not smarter than you. They don't have access to information you don't have. They're just earlier. Consistent investing. Boring diversification. No leverage. No all-in bets. No decisions made based on fear or hype. Just steady. Informed. Relentless. That's it. That's what beats every market cycle. Every time. Look, I want to be honest with you before I go. Nobody, and I mean nobody, can tell you exactly when this shift peaks. Not Goldman Sachs, not the Federal Reserve, not any financial channel on YouTube. Nobody knows. But what history has shown us, clearly, repeatedly, without a single exception, is this. The people who came out ahead were never the ones who panicked. They were never the ones who went all in based on a viral theory. They were the ones who understood the environment, made calm, informed, consistent decisions, and never, under any circumstances, allowed themselves to become the exit. That's what this channel is about. Not hype, not fear, not clicks, just clarity. So if this video gave you even one thing, one idea, one shift in how you're thinking about your money, please hit the like button right now. It costs you nothing, and it helps this video reach someone who genuinely needs to hear this. Subscribe if you haven't already, because next week, we're going even deeper into the specific assets that have historically outperformed during every financial repression cycle, and the ones that people think are safe that are absolutely not. That video is going to be one you do not want to miss. And drop a comment below. I read every single one. Are you worried about this wealth transfer? Or are you actively positioning for it? Tell me where you're at. I'll see you in the next one.